Hello, everyone. Today is Friday, January 15th, 2021. My name is Evan. Welcome back to our weekly stock market analysis video. If this is your first time tuning into one of these videos, welcome to the series. Welcome to our channel. We break our analysis up into two parts. In our first part, we're going to look at everything that went on this week in markets. We're going to look at performance and sectors and correlations, which is a new one, volatility, and really sort of just pick apart everything that stands out. And then in part two, we're going to jump into the charts. We're going to put everything from part one into context and try and make some sense and help position ourselves going forward. So hopefully that sounds good to you. Let's dive into some of the headlines for this week. We had earnings season sort of officially kick off. We had financial stocks reporting. We'll talk more about that later in this video. We did see the biggest down week for the S&P 500 in 2 months. That's a super scary sounding headline, but really the pullback here, or the down week, was fairly mild, about 1.5% down, and that mostly speaks to just how strong this market has been. So we'll talk more about that in just a moment. And we see the US dollar finding some follow through to the upside, maybe some of the culprit behind this recent weakness. So if we jump into the numbers here for equity markets, you can see it was basically red across the board. The Russell 2000, certainly the standout, up 1.5%. Everything else here, Dow, SPY, Nasdaq, world stocks, were in the red by 1 to 2%. And again, you can see that Russell 2000 outperformance here over the 1 month return, up 8%, while everything else is, 1 or 2 or 3% to the upside. If we look at market internals, another strong week here. Lots of new highs being set this week, over 1,200. Remember, the Friday numbers I have here are unsettled and not finalized. We did see some negative breath come in here in terms of the AD line on Friday, down 1,100. Still, the week was positive. And you can see the percentage of stocks over 20 SMA for the S&P 500 is about 67%. Now, if we look at those new highs minus the new lows, an accumulative sort of effect here over the past 30 days, you can see this nice orderly uptrend remains intact, perhaps slowing just a little bit based on the ascent here that we've been on, but still this is the undercurrent behind the market. This is what we've sort of been kind of hammering home, is that it is very tough to fight this type of underlying strength. When you see this type of movement here, the majority of stocks hitting 52-week highs, it's very tough to kind of get in front of that. And that still seems to be the case. Now, sector performance, most was red this week. So we saw just energy, real estate, and utilities eking out in the green. On the downside, though, communication services, technology, and staples were down anywhere from 2 to 3%. And again, only 3 sectors managed to hold on green. You can see financials were basically break even here into some of those initial earnings reports. Now, correlations here is a new slide, and let me speak a little bit about correlations. If you've never looked at correlations table like this, or spent much time looking at the correlations between assets, it can provide some pretty valuable information at times, and sometimes there's really no information to be had. The one important note I want to make is correlations that we're looking at here are based on the past 21 days. So that's one market month, one full month of trading is what these correlations are based off of. And correlations are always moving, right? So basically, as data continues to come in, these correlations are going to continue to change. So by the time, I guess Monday's a holiday, so markets are closed Monday, but as Tuesday trading comes along, these numbers are already going to start to be outdated, and they're going to start to shift and change. So you do have to keep that in mind. This is a snapshot in a continuous cycle here. But what's interesting about correlations is they can tell us when we have things moving together, and when there's a narrative, or when there's two sort of dominant flows that could be kind of impacting the other, or when we can get signals off of another asset to help inform our decisions about something else in the market. So when we look here at the current snapshot of correlations, what I think is interesting first off is the high correlation between what oil is doing right now and what equity markets are doing. They are very closely tied here, and this speaks to some of the outperformance in the energy sector, and some of the small cap outperformance is because lots of that is tied into the energy sector. Oil has been working very strongly to the upside, and we're actually seeing that in the numbers. If we look at the S&P 500, for instance, with its USO correlation, which is right where my cursor is, it's 0.898. It's a very tightly correlated. So oil is working higher, equity markets working higher as well. You can see it's even higher for the Russell 2000, which is probably a more appropriate index to measure USO impact if you're translating it to stocks. So that's one interesting thing. And then the other interesting thing, and I'd love to hear some opinions on this, is if we look here at so this little percent TNX, this is actually the symbol for the 10-year yields, right? So this is the 10-year yields or rates. And so what we basically have here is a very strongly coupled relationship between what yields are doing, what rates are doing, and what equities are doing. And so what this actually does mean, though, is as rates have been rising, that's actually been, we've been seeing equity markets rise right alongside rates. That's not something you typically will see in long-term market history. There usually comes a point where rates start to get above a threshold where if rates continue to move up, and it depends on the speed at which rates move up, but that will start to, generally speaking, impact equity prices negatively. We haven't seen that yet. So rates have been rising, equity markets have been rising. Maybe we're starting to get to the tipping point here when that starts to, look the other way. I'd love to hear other opinions on why this relationship has been working so far. But I do suspect, if this continues for a longer period of time, you'll start to see those correlations start dropping significantly, maybe even go negative. So those are kind of the two things I'd pull out there. Any insights anyone has on this, or anyone finds anything interesting, leave a comment below. I'd love to read them. And we'll continue to sort of iterate on our correlations table here. I might pull assets in and out depending on what's interesting in the market. There's obviously a lot of information on here. So it'd take us 20 minutes alone just to really dissect each of those columns. So hopefully that's interesting to you as a new piece of data. I certainly think it is. Volatility. So volatility term structure didn't really change a whole lot. Basically, we saw the entire curve just go up. So basically more fear coming into the market, more option protection being purchased. So that raises the blue line across the board, closing into 24 spot VIX. So a little bit, higher, of course. Good rally there in the VIX this week, but no real change in the overall structure. In terms of interest rates and credit, kind of what we were just mentioning, but yields were down this week. So we saw bond prices rising, yields falling. It was pretty minor, but that's sort of the relationship we had. And we did see investment grade credit start to rebound a bit. Remember, they had that sell-off last week. No real continuation to the downside for LQD. Dollar and commodities. So the dollar was very strong this week. And if we go back to our correlations here, and we look at the US dollar, so that's this middle row right here, so that's UUP. Take a look at the negative 0.8 correlations right here. That is for gold and silver. So what that's basically saying is they are very tightly inversely correlated. So dollar goes up, gold's going to go down. Dollar goes up, silver's going to go down. Go all the way to the bottom here. You can see Bitcoin as well, minus 0.62. So again, lots of correlation there between what the dollar is doing and what commodities are doing. That makes a lot of sense. And so that's kind of what's going on there. Clearly, my Bitcoin feed is broke on this one, so I'll need to fix that. We did not see a 99% drop in Bitcoin this week. So that is incorrect, but everything else here looks like it's accurate, and that's kind of the way everything shook out there in commodities land. So if we put it all together, it was pretty dismal across the board, frankly. Equity performance was mostly negative. Market breadth was really the only thing standing out, and that's a big thing. That's a big check mark in my book. But risk sectors, volatility, credit markets, all kind of lacking this week. So we get a D for this week's report card. Wasn't a whole lot to like out there, and we'll have to see how this shakes out into the rest of the month. Now, if we look at our trading systems here, top row Merlin has been taking lots of profits into this rally, down to about 69% invested, still holding on. Again, Merlin is not going to try and pick a top here, so it is going to look at this environment and say, time to put on risk, time to ride the uptrend in stocks. That's what it's been doing, and it's been, really bringing home some good performance. Lamerick here, 38% invested, much more short-term tactical, still pretty leaned in, at least at the close of today. Haven't run through the numbers on what's coming up for Tuesday, but a little more cash on hand and not quite as aggressively bullish as Merlin. If you want to find out more about these trading systems, take them for a free trial. Click on that link appearing in the top right of your screen. And with that, we'll jump into the charts here in just a second. All right, we're back here. We've got TC2000 open. We've got our equity market grid we are looking at. We have price itself is the white dashed lines you see. The multicolored dots are a custom smart trend filter indicator that we've developed. It measures price and volume, helps us determine trend and trend strength. And we are currently looking at a weekly time frame on all of these markets, and there's been no change. So the weekly chart here still unfazed. Most of these markets, again, closed lower this week, but we are still well above our trend, and therefore we are still seeing green dots basically printed right across the board. The Russell 2000 clearly has the most space in between it and its trend. Nasdaq getting a little bit closer here, but still very much bullish. Now, if we go down to a daily chart, things start to change a little bit, specifically with the SPY and the Nasdaq. So both of our top grids here. In the top left, you can see the SPY went neutral here on Friday. So we are still above our smart trend filter, but it did go neutral. So that tells us that there's some cross currents going on here. There's maybe a little bit of volatility, and there's some signals kind of in both directions. As we always say, we kind of give the benefit of the doubt to the prior signal, which in this case is bullish. So it's still kind of in the bulls camp here, but it's worth paying attention to. Same goes for the Nasdaq, although you can see the Nasdaq actually broke below its daily trend filter. Still just a yellow dot, so we're not getting a sell signal yet, but it's telling us that we want to start paying attention to what's going on here, because you might have some shifts in potential trend changes. Now, Russell, again, still bullish. International stocks are still bullish as well. So let's break it down a little bit tighter here. Let's take a look at the S&P 500 and try and make some sense of maybe the candlestick analysis here, get a little bit of a closer view. And so this is sort of the grid we've been looking at, and these are levels that we've had drawn on here. And when we look at what went down here, primarily on Friday was the culprit for this market. So stocks fell on Friday, broadly speaking, minus 0.72% for the S&P 500. And what you'll see here in the very short term is we had this nice and orderly range that developed. So essentially from last Friday all through Thursday of this week, we went sideways in this very tight overlapping range, and then we got kind of a gap down and then a sell-off for Friday, breaking down from this range and selling off a little bit. So we've got a little bit of short-term technical damage. We've got this range here. We broke down. If we zoom out, we're still clearly in that longer-term uptrend. We're still holding longer-term support, but it's time to pay attention. And just like our smart trend filter is telling us that, what we can start to measure now is the more specific levels. This 3720 to 3710 zone here, this is basically what we looked at as a level we need to see this market hold in order to stay healthy, in order to keep that technical uptrend in place. That's exactly where you'd want to see the market hold. Seems like we would get maybe a test of this next week, and how the market reacts down here is where we would get some more information. Obviously, it's not a guarantee we get down here, but it seems like if the sellers can get some more follow through, or if some of this recent change of character continues to hold true, then we can get back down here and test, and that'd be an interesting spot to evaluate the market. I would also say, if we look here at just a clean board, we do have kind of this longer, broader term channel that we've been rising in here. So you could look at it like this. and you could say market's been orderly here to the uptrend. Maybe another trip here down to the bottom end of the channel, and we'll see if that holds as well, right? So you kind of have this dual point here at which you can start paying attention to the market. We've wicked underneath it a few times in the past. We'll see if this time bulls will defend that lower channel as well. So that's kind of the way we're looking at it here. There's definitely some cross currents. You finally have some short-term signals that markets are starting to maybe roll over just a little bit. And now it's time to, plan or take action or take notice. Obviously depends on everyone's time frame, strategies, goals, and all that good stuff. So that's the outlook there for the S&P 500. If we go to the Russell, you can see the Russell was much less phased on Friday. I mean, it was down the biggest, actually. It was down 1.5%, but when you have a trend that has been so darn strong like the Russell, then, a 1.5% down move doesn't do a whole lot to a chart. But if we look here at maybe some of the near-term levels, I'd be paying attention to this right in here, this 204. So you can see we basically, kind of closed here on the 6th of January, found some support here on the 8th, found some support and open there on the 11th. So that 204 level would be something I'd be paying attention to in the very short term. I'll also point out the volume that came in on Friday. So you can see above average volume on the sell-off. So a little bit of a notice right there as well. And quite frankly, just again, the Russell has been basically up and up for the past 2.5 months, up 40%. It's setting some records in some cases on just how much it's been rallying. So it's due for some type of, or it'd be logical to have some type of pullback here, and maybe this is the start of it. So again, a little bit of some signs there to pay attention to. Finally, we have the Nasdaq 100, probably again the most concerning, and we sort of highlighted this last time. You can see my old volume drawings down here are still in place when we were sort of picking this apart, but basically saying like, look, all the high volume days, every one that came in above average volume was on a sell day, and you basically got another one, granted a little bit smaller, but you basically got another one here on Friday. So they're sort of stacking up. That's not the greatest sign. You don't necessarily want to see that. It's not necessarily a sell signal in itself either, but it's just, again, when you're looking at weight of the evidence sort of technical analysis, these are usually strikes, not check marks in a bull case. So when we look here at the Qs, you can see this one looks much more gradual too, right? So this doesn't have a nice strongly uptrend 45-degree angle like the Russell, or even a bigger angle like the SPY. This is much more gradual here, and so the concern is, the Nasdaq just looks a little bit tired. We're going to be going into earnings season, of course, in more full force. So it'll be interesting to see how this all sort of plays out. But the Nasdaq is already back to a lot of supply in here that it's been trading. So I would just be watching, I have this 303 old level drawn in here, but really, all the way up to about 306 or so, or even losing some of these prior peaks, as the Nasdaq continues to roll here below these levels and below these prior highs, it gets a little more, on thin ice. So I'd be most skeptical here of the Qs. So that's sort of the roundup there. That's what I'd be looking at. Lots of cross currents in the short term. We'll see if that turns into more intermediate term damage. So far it's contained, but I think we should all be paying attention here as we see some of those cracks highlight. Now, if we go back to some of our other markets, we look at, let's see, TLT, for instance, down here. So on a weekly chart, still showing a sell signal. Let's go to a daily chart on all these instruments. You can see VXX is trying to turn up. So that's volatility trying to turn up. TLT got quite stretched in the short term here this week or really last week in its sell-off. It stabilized a bit this week and still looks like it's in a pretty tough spot. Our high yield is still holding up. LQD, which is our investment grade, is a little bit, pessimistic of a view here. Bearish signal, sell signal came last week on the 6th, and we are still below our trend filter. I know I bounced around in a weird order on those charts, but that's kind of the roundup view in terms of our smart trend filter. Let's jump right back into candlestick analysis here. Let's go to a few different charts. I want to go around the board. I want to talk about the dollar first. We talked about the dollar last time. We mentioned the fact that we had some nice positive divergence brewing. It was quite oversold on lots of metrics, and lo and behold, here we go. Dollar is rebounding here, and if we go on a weekly chart, this is really the first back-to-back bullish week here that we've seen in a very long stretch. It's been just nothing but down for the dollar. Everyone has kind of knows that now. That's been a very popular trend, and I think now that everybody knows it, it's time to kind of mix the kind of swash this around here and just kind of turn people up. Getting that rebound in the dollar, closing the week strong. Looks like it wants to go higher, maybe all the way back up into the mid to upper 24s. Again, trend longer term is still down, so I wouldn't want to overstay my welcome, but it does look like some of this increase in volume and the divergences that this wants to play, a few weeks to the upside. So that's the dollar. Again, we looked at those correlations. We know that's going to put pressure on the like of gold, silver, Bitcoin, those types of things. If we go to, in fact, gold next, you can see here it is having a pretty down, tough week. We know dollar up, gold down. That's a good, strong negative inverted correlation right now. And you can see again, just weekly chart here, gold, I think at its best is just, again, more sloppy sort of sideways range bound behavior. At its worst, it's going to, come back down and, potentially challenge these old lows. For now, though, it just looks like a tough spot. Again, depends on your time frame. If you're very long term, maybe you're accumulating at lower prices, but GLD here just looks a little bit rough. Silver, kind of the same thing, breaking back down into this old range, just looks like sideways and kind of in a tough spot for the time being. If we go to TLT, you can see this tried to hang in here this week. Again, from a classical sort of technical analysis perspective here, it is below 155 and therefore all bets are off. I just don't like to trade or hold or be long instruments where there's lots of overhead supply with fresh breakdowns. This very well could turn into some bear trap here and we could just rip right back above 155, and if we do, then certainly the analysis and the outlook changes, but until and if that happens, I think you got to be careful here in TLT, and it's at least an avoid. If not, path of least resistance is lower. If we go to some sectors next, a couple of sectors that look still pretty strong here and actionable is XLV, number one. So XLV here, you can see good volume to start the new year. It broke out to new highs. And then you can see even today, it was up on the session while most things were down, and it's really just flagging high and tight. So XLV continues to hold up, showing some good relative strength, lots of good individual candidates under the hood, so that looks pretty good right now. XLI here tried to break out. It got a new closing high, and then it kind of just rug pulled back into this range. So it's kind of just, it's back to neutral here. It is holding up. It is, right up near highs. So let's pay attention to it. It could go either way. This could turn into be a topping pattern, but for now, it hasn't. Trends are up, consolidations in place. Let's just pay attention to it. Last but not least is XLU starting to shape up here. So as risk starts to get a little more uncertain, then suddenly utilities, more defensive tone to the market. And of course, with what yields are doing, starting to shape back up here. So it looks kind of interesting. Looks like this could start to run if we can get some follow through over 63 next week. Now, in terms of downside here, the only one I'm really highlighting is XLK. XLK just looks a little sloppy. I mean, it's similar to the Qs, of course, but this just looks a little bit weak, a little bit sloppy. You can see not the best volume pattern here. Momentum is just, kind of pushing back down to flat lines. So XLK right back to, let's put on this line here, right back to these old highs here from September. In fact, closing right below them into Friday. So you can see a weekly chart. This looks pretty dangerous. Monthly chart, you can see if it starts to lose this area here, maybe we come all the way back to the 110s, which wouldn't be the worst thing in the grand scheme of things, but you are talking about a 15% correction in XLK if we got all the way down here. I think it's in the cards. There's a probability. I'm not calling for it. I'm not saying it has to happen. Just saying let's keep an open mind. If it starts to lose these highs up here, then could easily fall back down into the lower midpoint of this range. So that's it. That's kind of everything here. It's a little bit long-winded, so sorry for the long video, but as always, thank you so much for tuning in and watching. I'd also love to hear what you found interesting this week. What did I miss? What are you paying attention to next week? What are the correlations or markets that you think are most important? Leave a comment below. Always try and respond to everybody as best I can. So thanks so much. Have a good weekend. If you like the videos, do subscribe to our YouTube channel, or you can follow us at The Trade Risk, and we'll see you back here next week.